Amit, you're a hardware analyst. A big bull part of the thesis for Apple is that it's moving to be a services company. So is this any sort of a statement on where you see Apple's ultimate core business being?
Yeah, it's becoming hard to be a hardware analyst these days, I guess. No, so I think Apple's growth is really going to be more driven on two factors. One is services. That piece obviously will grow 20% a year. We think that can accelerate in the back half. That's going to be a nice catalyst. And the other is this other segment they call, right? The Apple Watch, the AirPods. I think those attach rates will keep improving. So in a flat iPhone to a slight declining iPhone environment, I think it's services. I think it's other category that provides you the growth as you go forward.
How do you think about a potential antitrust investigation into Apple and what the what the realistic worst case scenarios could be for this company?
Right. I mean, there are two ways you could end up with this, right? One is, do you force Apple to cut the take rates from 30% to something lower? And if you can take it down to maybe 10, 15%, there's an EPS implication. I would argue it's not that severe. It's in the 5 to 10% kind of EPS range. It's livable. The other one would be, if you look at what's happening in Europe with Spotify, right, is does someone eventually force Apple or tell Apple, hey, we think it's unfair, you're bundling everything together? A realistic bad case would be, do they say, you got to spin out Apple Music and iTunes or some of the other segments out into an independent domain versus bundling it? Those two could be the relative realistic negative scenarios out of these issues that we see right now.
So when you mention the phrase take rate, you're talking about the amount or the percentage that the cut that Apple gets from the sale of apps or in-app sales that are made by the app developer. You're not talking about iPhone sales where they have what market share of maybe 30% in the U.S.
Right. No, absolutely. I'm talking about the Apple tax, if you may, on the App Store that's implemented when that app developers pay Apple.
And speaking of which, Amit, that's one area where if regulators say, look, this is akin to Microsoft using its operating system to push the browser, you have too much control of this. It may be unfair because all along the way they never stopped it. But if they choose now as the starting point and say you can't do this, what happens to the business model? That's a huge part of their services revenue.
I mean, it absolutely is. And you've seen some of this happen with Android in Europe, I would argue. I'm sure Apple's take would be, listen, we provide a certain amount of curation, safety protection for the customers. And at the end of the day, it's the app developer that decides what the price is. And certainly, Apple charging a 30% extra rate, it's not changing the scarcity of the product, the apps itself. So I could see Apple have a more powerful argument saying, even that 30% rate is not impeding development or creating scarcity. So why change that or why have an issue with that?